Hey guys, welcome back to the channel. So it's Pete. This is where we talk about money, finances, where we give you information and education to help you make the best financial and investment decisions possible. This video, you can tell by the title, is going to be reviewing Hargreaves Lansdown. It is long overdue for me to do this video, particularly as I've been talking about the fact that with the way things are at the moment, it's a really good idea for you guys to be investing in index funds where you can get market saturation and keep the investment costs down. I've had a ton of messages about this on IG questions, so I thought I'd create this video to give you guys a little bit of an insight, things that you need to know if you are new to using Hargreaves Lansdown. Now, I'm going to focus specifically if you're looking to invest monthly with Hargreaves Lansdown, and this video will form a part of a larger series of videos that I'm going to be doing because with Hargreaves Lansdown, there's so much in there that I want to be able to not just jam it into one video, but do a number of them where we talk about different aspects of what they actually offer so that you've got the full picture in terms of what you need to do and what you need to know as a first-time investor using them. Before we get going, couple of bits for housekeeping. First and foremost, number one, we crossed 5,000 subscribers last week. So again, guys, thank you so much for every single one of you being here, for every single one of you who has been here from either the beginning or the middle, or literally have only just joined the channel. I appreciate every single one of you. Last week, I announced a bit of a giveaway, and I'm going to be pulling and announcing the winner to the giveaway either Wednesday or Thursday this week. So definitely keep an eye out for that video. Secondly, another thing that I do here on the channel, well, not here on the channel, but as part of my other brand, Money Intelligence, is I run workshops for people to empower them on their financial journey. I just don't look at investments like I do here. I also talk about home ownership and stuff like that. So we have an event November 7th. It's in about a week and a half time. It is designed for first time buyers. So if you are looking to get on the property ladder, but you're struggling with your deposit, this event is going to help you massively. That's the artwork in terms of the poster and information. You can find more on my Instagram. I will post a link for you to find more in the description. So if you are planning to buy a house in the next 3 years, 2 years, a year, or even 5 years, then this is really going to help you because we're not just going to tell you about the mortgage process. We're going to get you to understand what all of the mortgage costs are, including your deposit. And we're actually going to help you create your own personal financial plan to help you actually save for a deposit. It's going to be full of workshop items. It's going to require work. It's going to be interactive. It's going to be great. So make sure that you check out the link in the description on how you can actually book as well. Now, with that being said, let's get into Hargreaves Lansdown because there's quite a bit I want to cover. We're going to hop onto my laptop. I'm going to show you a few screens and walk you through Hargreaves Lansdown, the first part of a series. And we're focusing again on if you're an investor who wants to invest on a regular monthly basis. Let's go. So first things first, who are Hargreaves Lansdown? They've been around for a while. They've been around since 1981. They have 1.3 million customers and they manage in the region of about 96 billion pounds. It's a lot of money that they manage for people. Now, as a business, they are classed as an execution-only business. And what that essentially means is that they will package funds, ETFs, trackers, and they will make them available for you to access based on your preferences when it comes to investing. Picture it this way. They're like, you have a shopping list and you go to Tesco's. They are essentially Tesco's. You walk around Tesco's and you pick what you want off the shelf. This is very, very similar in terms of how you could view them as an execution-only provider. So they are there to basically package the investments for you and you pick one that you feel suits you. Now, with that said, I think it's really, really important that we go back to some of the basics that I know that I've mentioned on this account so many times before, but they are really, really important to reiterate because we are looking at an execution-only provider. And the onus is on you to understand what you're doing and to understand what selections you are making. They do try and guide you as much as possible, but they are reliant on you understanding what you're doing because they're execution only. They don't provide any advice. They don't provide any guidance. You could literally phone them, ask them questions, but they will never give you any answers beyond what is black and white. They won't give you any nuances because they don't want to cross that advice line, that implied advice line. And this leads me on to something that is really, really important for this video. Don't take any of what I'm about to say as financial advice, but please take them as a point for you to do your own research and for you to base your own opinions on after doing further research. So some of the bases that are really, really important. The first one is this. This really can't be overstated, guys. And I reference this. I have a chapter where we talk about this specifically in my investment course. And it's really, really important that you understand your attitude to risk and how that is impacted by your investment time horizon. And look, general rule of thumb that I explain in the course, I'm going to give it here as well for free for you to understand, is that the longer you invest for, the more risk you can afford to take. If you're investing for a shorter period of time, then the less risk you should be looking to take. So you really need to understand what is your attitude to risk based on your time horizon, but also based on a number of other factors as well. One of which is, do you have firm controls over the money that you have coming into your account and the money that you have going out of your account? So income versus expenditure. Now, in an ideal world, you should not be investing unless you've got a really firm control over your day-to-day money. If you're living from paycheck to paycheck with no surplus income, then really investing isn't something you should be looking at. You should concentrate on getting your finances straight first and getting some surplus income. It may mean cutting down some of your expenditure, but you really need to make sure that the money that you're investing is surplus money that you don't actually need. The second thing that is really important in this equation is you have to make sure that you have an emergency fund. So typically speaking, we're talking 3 months at a very, very minimum, up to about 9 months. You can go 12 months if you want to. And your emergency fund is essentially all of your essential expenditure. So your mortgage, your rent, your gas, your electricity, council tax. You times that combined number on a monthly basis by 3, 6, 9, or 12, whatever makes you feel more comfortable. And you need to ideally have that money set aside in a separate account that is easily accessible to you before you begin investing in the market. So that's the first thing that you really need to understand before you start using these guys to invest as a first-time investor, as a DIY investor. This is the second thing. Again, I reference this in my course. This is an extremely important part because now you've got the foundations in place by understanding your attitude to risk and budgeting, your money control, and also having an emergency fund and understanding how long you're going to invest for. But you have to have a purpose for investing in the first place. And the clearer you are on your investment objective, the better it is going to be for you. And the reason why that is important is because within Hargreaves Lansdown, you're going to be presented with questions that are going to be predicated on your objectives. So for example, are you investing for income or are you investing for growth? If you're in your 20s and your 30s, then you really should be investing for growth and not for income. Your younger years are the engine to building wealth. So investing for growth, investing to compound your returns is really what you should be looking for. However, I know that there are some circumstances where you may be looking for income because you may have a different kind of lifestyle, or your lifestyle or what you want to achieve in life or what you want to do in your life may be very, very different. But these questions are going to be asked of you when you use Hargreaves Lansdown. So it's really, really important that you have a clear objective. And when I mean clear, you need to have this written down. You need to understand exactly what it is. And you need to understand also how you're going to execute it by using Hargreaves Lansdown. So what role does investing with these guys have to play in you achieving your objective? The third thing that is really important before we dive in is this. Right, so if you don't know what asset allocation is, again, I reference this in my course. So the course is great for getting the foundations that you need if you're going to start using people like Hargreaves Lansdown, Vanguard, Fidelity, because asset allocation, these are phrases, these are language that you're going to be hearing quite a bit. You're also going to be hearing things like asset classes. But to just give you the lowdown, so asset allocation is essentially how you want to invest based on different asset classes. And the way I explain this on the course is I liken them to baskets. So essentially, there are four very popular asset classes that we use when we invest. They are bonds, they are equities, they are property, there is cash. Those are the four most popular ones. Now, asset allocation is essentially how you allocate your money to each of those assets or to those baskets. So when you're using Hargreaves Lansdown, you need to have a good understanding of what asset allocation you think in your mind is going to suit you. And that directly ties to your attitude to risk. So these things are interlinking. So you need to understand what your attitude to risk is, and that will inform what asset allocation you have. So let me just give you a very brief example. If you are only looking to invest for, say, 3 years, then your attitude to risk should not be a 10 out of 10. It should probably be around about a 3, a 4, maybe even a 5, depending on what options you're going for. But I would certainly lean to more caution than adventure. So a 3 to 4. Now, with that being said, when you look at the asset allocation that goes alongside that, the last thing you should or really want to be doing is investing a load of your money into equities, which are the riskier asset class. And again, I cover all of this in my course. So this may sound like gibberish, but I would encourage you, go and have a little read about what equities are, what bonds are, what properties are. For bonds specifically, I did this video a few weeks ago. Go and watch that. That will give you a good idea of bonds versus equities. So you need to have a good understanding of how do you want your money to be split across those four baskets or across those four asset classes. You're not going to get any advice with Hargreaves Lansdown on how this is going to be. You have to determine this, which is why it's an execution only platform. So you need to understand and do all of this research and make those decisions for yourself, again, based on your attitude to risk, based on your investment time horizon, based on whether you have a good control over your money, and based upon whether you have a sufficient enough emergency fund. Now, with that being said, I want to show you a couple of things on Hargreaves Lansdown in this particular video that I think is going to be really, really important for you, particularly if you are going to be looking to invest on a monthly basis as a new investor. So let's jump over to my laptop and we'll get going. So this is their website, and like I said, I use them. I've got some of my shares in here. I'm not actually logged into my account right now, but the first thing that I want to highlight for you guys is the Learn tab right here. Now, again, if I've used some language, asset classes, asset allocation, I've broken them down very, very briefly here for the purposes of this video. But if you want to learn more, they have a really, really nice Learn section, and they cover quite a few topics. So here you can see guide to ISAs, guide to SIPs, guides to investing in funds, how to pick shares, pension calculator, ISA calculator, drawdown calculator, inflation calculator, charges and fees, adding withdrawing money. So it's worthwhile spending a little bit of time in this section of the website. If you come across language that you're not really too sure, you can also use the search function here as well. But what I want to do is I want to focus on their services, and I also want to have a look at this feature specifically, which is regular investing. And this is what the purpose of this video is designed to do, to empower you if you're looking to invest on a monthly basis regularly. But before we do this, due diligence is very, very important. So I've already loaded this up. And you know what I always say, it's very, very important that we have a look at companies that are authorized and regulated by the Financial Conduct Authority, particularly if they are operating within the UK. Now, as you can see here, Hargreaves Lansdown is actually called Hargreaves Lansdown Asset Management Limited. That is their registration number right here with FCA. So they are authorized and regulated by the FCA. Now, interestingly, because Hargreaves Lansdown is a pretty big provider in this space, there is a notice on the FCA website that basically warns that there are companies that are cloning the Hargreaves Lansdown website, essentially. So just to be careful. And this is really just giving you a breakdown of who this firm is. It gives you the address, gives you their telephone number, gives you their website. It gives you the fact that they have 12 different trading names, the registered company number, company's house. It's giving you all the information that you need. So again, when you're doing your due diligence, it's really important that you check these things out. The second thing that you have to check out is whether they're actually covered, you'll be covered under the Financial Services Compensation Scheme. Now, the language that the FCA tend to use with this is always maybe. They will never give you a definitive answer. They always try and kind of skirt the fence and stay neutral. Now, because they are registered and authorized by the FCA, you will get cover under the Financial Services Compensation Scheme. So with them, it's £85,000. Now, interestingly, if you watched any of my previous review videos, you'll know that I've always said that most of these companies will put this information in the footer of their website. Hargreaves Lansdown do not do that. So I'm just going to go down here very, very quickly. It would normally be here. With Hargreaves Lansdown, they actually haven't done that. So you have to fish it out. One thing that I would say that is really important for Hargreaves Lansdown to acknowledge is that they themselves are a FTSE 100 company. So they are actually on the FTSE 100 here in the UK. So if you are buying a FTSE 100 tracker, for example, you're buying Hargreaves Lansdown shares. So they are a publicly traded company, essentially, on the London Stock Exchange, and they are one of the top 100 companies here in the UK. So hopefully that gives you a little bit of comfort as well to know that these guys are huge. They've been around for a very, very long time, and they're actually a big component of the actual stock market itself. So what I want to do is I just want to go back up here very, very quickly, and I do want to focus on the purpose of this video, which is regular investing. So if you are looking to invest on a regular basis, this is perfect for you. This is giving you all the information that you essentially need. So it's saying you can invest by direct debit. The starting investment for this is £25 a month. So essentially it explains how it works. So the direct debit will be taken from your account on the 7th of the month. Funds are invested on the 10th. So it takes about 3 days for the money to come over to them, then for them to execute the investment, execute the trade. So 3 days roughly between the direct debit going and actually investment actually happening on your account. Now, it does give you a little bit of a talk around, what is investing by direct debit. Obviously, it's automatic, it goes from your account, it's funded into your Hargreaves Lansdown account, is therefore invested on your behalf as a result of that. Now, there is a disclaimer here to say that these dates may change because they may have some internal workings that need to change, but roughly around about the 7th of the month is when you'll see the direct debit leave your account. Now, what can you invest in? You can invest in funds, you can invest in the FTSE 350. So the FTSE 350 is essentially the top 350 companies here in the UK. And you can invest in certain investment trusts and ETFs. I need to do a video specifically on investment trusts. On ETFs, I spoke a little bit about ETFs in this video right here, so it's worthwhile checking that if you're looking to understand what an ETF is. If you click on these here, it gives you a long list of all of the investment trusts that you can invest in. There's quite a few there. And if you come back out of here and go back into ETFs, there's also quite a long list of ETFs that you can also access by investing on a monthly basis with Hargreaves Lansdown. So this is where your money is essentially going to go. So there's quite a selection within that. Now, it does tell you that there's no charge, no funding and charges or anything like that, but you do have a charge of £1.50 per trade. So these are worthwhile bearing in mind, and it is taken directly from your direct debit. So account for that in whatever amount that you're investing on a monthly basis. So for example, if your target is to invest £100 every single month, you probably want to do your direct debit for £101.50, for example. So just bear that in mind, because if you are working to a very specific goal, the £1.50 could make a huge difference, particularly when you start looking at long-term investing with the compound interest impact as well. So just bear that in mind. One thing that they really do that I do like is they actually allow you to have a little bit of a forecast of what you might actually get by investing on a monthly basis. So let's just play around with this feature right here. So let's just say you wanted to invest, say, £100 every single month. And I'm just going to go, we're going to go with a 5-year term, okay? Let's have a look at some additional options. Let's just say you have a lump sum of £2,000 as well. And let's just say on your attitude to risk, you are a high risk investor. You then calculate, and it tells you that the estimated value after 5 years will be £9,859, and your total contributions over that period of time will be £8,000. So it allows you to see roughly what returns you could expect over that period of time. This is assuming, as an adventurous investor, that you're returning 8% a year. If you go medium, which is balanced, so this is maybe a 5 out of 10, you're expecting a 5% return every year, and it tells you would have contributed £8,000. However, the value of your investment should be 8,986 after 5 years. If you're low risk, so i.e. you're only going to be, investing maybe for 2 years, which is, still not advisable. Maybe 3 years might be a little bit more palatable. And your low risk is telling you that if you contribute £8,000 over that 5-year period, then your return at a 2% rate is only going to be £187,000. And it does give you a little bit of a breakdown in terms of some of the deductions. I mean, this is bearing in mind that you've got an annual charge of 1.25% included within this as well. So it allows you to have a little bit of a forecast in terms of what you can expect. Now, if you are going to be using this feature, I would really recommend, do have a good look around this and try and make sure that you use this as a way to help you plan in terms of your goal that we referenced at the beginning of this video. Because if you are, for example, looking to invest because you need a house deposit, then it's really, really important that you know what these numbers are from the outset, because it could make a whole lot of difference to you. One thing to remember is that, they are assuming a 2, 5, and 8% return in this video. You may not get that. So if you are investing as a DIY investor, then it's really, really important that you have a look at monitoring this on a year-to-year basis. Did they perform at 5% for the first year? If not, you want to have a look into why. You also want to have a look at what their competitors might have done. So what did Vanguard provide in a similar kind of fund that you went into? Were they behind? Were they ahead? You always want to be able to benchmark them against a peer. So Vanguard, maybe Fidelity is a really good peer to benchmark them against. But if you are investing for a specific goal, you have to review this on a yearly basis, at least on a yearly basis, and keep an eye on it. If you then feel that maybe they have underperformed, then you do have the ability to move away from these guys and use somebody else if you wanted to. I would be aware of that, because you may have exit charges and there may be capital gains, for example, that you will have to pay depending on what wrappers that you've invested in. You can invest in ISAs, pensions, and all kinds of sort of other wrappers here with Hargreaves Lansdown. For this video, I didn't want to go into that specifically. It's all about investing on a monthly basis. And by the way, you should be able to invest in an ISA using Hargreaves Lansdown for this option as well. So depending on what accounts you go into, you may have capital gains charges, you may not. But again, as all things, I always say this, the first rule of financial planning is one of the first things that we get taught, to think about tax efficiency first. So ISAs should be your first port of call, not an investment account or a general investment account as we call them. An ISA should be your first port of call. So guys, let me know in the comments if you found this useful. If you have any questions, post them in the comments as well. I appreciate you sticking to this. I've tried to keep it as concise as possible, and I do hope that the walkthrough has been as helpful as possible and gives you some kind of insight, some kind of guidance. What I would say here is fundamental information is really, really key. This is execution only. You're not going to be handheld. So you kind of need to understand what you're doing. So again, if you haven't taken my investment course, it's $99.99. It will really give you the foundations that you need. Because I'm very, very conscious that when you use these, I built the course to really give the foundation for these kind of providers specifically. There is a link in the bio, in the description, sorry. So make sure that you go check that out. And guys, an alternative that you could do with this is you could just join the members group that I have, which will be the join button underneath this video. I'm actually taking a group of people through the investment course over a number of weeks, and we also have a private Discord group. So consider joining that maybe. That's at $17.99 per month. So maybe a better way for you to access the course. But guys, thank you so much for listening. If you haven't listened to the podcast this week, it's all about ethical investing, which is an interesting one now that we're talking about Hargreaves Lansdown. They do have ESG funds. We'll get to that in another video. But guys, thank you so much for watching. Until Wednesday or Thursday when I announce the winner, catch you soon.